Hey traders, for the ones that are here, this is Omar with MotiveWave. Welcome to the first webinar of 2024. For the people that may have joined a bit later, the webinar is going to be recorded and set up over on our website under the Marketplace webinar tab. So take a look at that when you get the chance. Let's move over. So today's title is The Profit Puzzle, Decoding the Path to Successful Trading with none other than Aaron Rentfrew. Welcome aboard, Aaron.
Thank you, man. Thanks for having me.
Okay, let's switch over to the second one. Okay. So I'd like to take the chance to thank everybody for tuning in. Today's presentation will be approximately an hour long. We will begin with a brief intro from Aaron, preceded by a podcast-style question and answer period. Shortly after, Aaron will hop on the charts and start the educational portion of today's webinar. For those of you that are here, please hold your questions until the end of today's presentation. Feel free to write down your questions and hit the send button once the Q&A portion starts. For those of you that are having trouble in the chat, there's a Q&A portion where you guys can take a look at it. It's at the bottom portion of your Zoom desktop app. You can take a look at the controls and get started over there if you want to drop any questions in. And be sure to stick around for all the way until the end. We do have a special announcement for MotiveWave that you guys are not going to want to miss. But before we get started, let's get started with a disclaimer. All right, I think that should be good enough. Aaron, did you want to take it away?
Yeah, man. Just a little bit about myself. I trade primarily in ES and NQ futures and have been trading actively futures around 7 years, more so around 5 years full time. Before that, mostly got into stocks and things like that. I mean, I traded from the road for years traveling. And so that was a big thing that got me more so going full time was the fact that I could really do this from wherever. So I used to trade as I was traveling through Asia, Europe, and during COVID, more or less road tripping around the United States and things like that. I would have my screens in my car and travel and be hiking all over the world. So I think for me, as a natural fit with my lifestyle, the trading world. But I think also what's somewhat unique is that I struggled with a lot of the same things that that many traders struggle with when it comes to the emotional side of trading. I think I've struggled in the past with over trading, struggling to hold on to winners and things like that. And I spent years in the personal growth space, working with executive teams and doing a lot of executive coaching and emotional management with people. Also, I have 14 years sober, so I've spent a lot of times working with people that had emotional trauma and things like that. And just kind of growing up in that way, it got me to look at things slightly differently in terms of how we can change our behaviors, how we can change our decision making, and it served me very well in trading, even though I struggled quite a bit. In the beginning, I was able to change many of those behaviors just with what I had studied in the personal growth space before, and being able to change my own life. So I apply a lot of those things to what I talk about with trading. I work with a lot of traders now on the emotional management side as well as strategy, but more so on the self, on working on ourselves to be able to reach our goals and things like that. And I know I've used it quite a lot in my life, and that's what I try to help people with today and going forward. I find a lot of fulfillment in doing it that way, and in working with people and seeing the lights come on. So that's kind of what drives me and what drives conversations like this.
Absolutely. I'm sure a lot of people that are not so new to the trading industry have come to the realization that the person that you were when you first started this journey is not going to be the person you are, especially when you want to become successful and consistently profitable in the markets. It takes a lot of personal evolutions, a lot of introspection, a lot of change, a lot of getting better 1% every single day continuously in order to finally break the mark of consistent profitability. Would you say that would be correct?
Absolutely.
Okay. Yeah, how did you get into trading? Why trading?
So, I mean, initially it started really as I was getting out of high school. I had an uncle, he was an executive with a large hotel group, and he was a fairly active trader on the side. He would take mostly swing trades and things like that, and he really got me involved in the market and taking, little trades here and there. And this was as I was getting out of high school. It was in the lead up to the tech bubble. So I graduated high school in 1998, and he
Mhm.
was getting me into these random stocks as the kind of the tech bubble was I lost my screen there for a second. Sorry. Kind of as the tech bubble was blowing up, and so I was winning on every trade and doing quite well.
Mhm.
And then kind of got away from it for a couple of years, but always had a fascination for markets and risk. I was always looking for risk in my life, and I enjoyed that. I enjoy starting businesses early in life, and I always just kind of took that on, and it really translated into trading for me. I always came back to it, from when I was 18, and again when I was 22, and then uh, even
Mhm.
more so later on in life. But it really also served well with my lifestyle and what I wanted to do. So, um, I think I was a terrible trader to begin with and struggled with, as I mentioned before, a lot of the emotional stuff. But kind of working through those, you get to know, I think, kind of touching on what you said before,
Mhm.
when you start trading, you learn a lot more about yourself. It tends to bring out the worst parts of you and kind of expose them. And, I find that when I was willing to change, I was able to get better at trading, and I started to find a little bit more success,
Mhm.
started to mitigate a lot of that fear and trouble that I ran into, I think, early on. So initially, I think it was the risk I was drawn to, but it brought a lot of pain with it. And then more so once I started dealing with that, it was other things that kept me trading. I like the idea of solving puzzles. I like trying to figure out what's going on. And it's to me just been every day something new. It keeps the mind very active, and
Mhm.
I like the community as well.
Absolutely, absolutely. Yeah. I mean, trading doesn't make it easy for you. You know what I mean? Touching on a little bit of psychology, there's let's just say when new traders hop on the charts, they don't have clearly defined risk. They may be over leveraging. It basically puts you in a fight or flight response from the experience that I've had, the 4 or 5 years of experience that I've had trying to become profitable and getting to the funded status myself. Um, Basically, you look at the charts, you're over leveraged, your palms are sweating, your heart is beating. You know what I mean? It puts you in a fight or flight response. And like just a little bit of physiology behind that is your the blood from your prefrontal cortex goes to your motor functions, right? So when the blood goes from your cortex to your motor functions, it basically disables your ability to think coherently under stress, which if people really look back at their adults, they'll realize that they've made a lot of, for lack of better words, dumb mistakes when they were a bit stressed or they were in drawdown. They may have added to their position when their trading plan clearly outlined that you're not supposed to do that. So those are one of the physiological factors where traders do need to be introspective and develop tactical strategies when it comes to dealing with the stress. And understanding that before you put on risk, you got to accept the loss, right? because trading is a numbers game. If you're gonna trade, you're not gonna be right on every trade. You're gonna be up overall, regardless of how good you are.
Would agree with that. I think the part that a lot of people get away from is separating the emotional component from the strategy component. And you see a back and forth quite a bit about that strategy is more important, or that managing yourself is more important. And I think that they can't be looked at individually. They both must work together, because a lot of our issues are going to arise from not, for example, if we don't have a really good exit strategy, our only decision-making process is going to run through our emotions. So we'll exit a trade just based out of fear, or that we are unable to continue to hold that risk, just to make that anxiety kind of go away. We'll exit the trade rather than having a clearly defined exit strategy. And just simply doing some work on an exit strategy can work on that mental component more so than, say, like meditating every morning, or going through a bunch of breathing practices, which I do find helpful. But I find that oftentimes you can't look at the emotional component without the strategy component.
Absolutely, I 100% agree. And just a little bit of tools for dealing with that would be keeping it an emotional aspect to the journal, where you have a checklist mentioning, did I exit based off my rules, or did I exit based off of emotions? Did I enter based off of emotions, or did I enter based off of my trading plan? You know, so for me personally, that's helped quite a bit. Have you noticed that maybe including an emotional aspect to your journaling process would be beneficial?
Yeah, I mean, as part of, so I have a mindset course, and part of that course, I include a journal, and in that journal is essentially a drop-down menu where you are able to pick the emotions that were most heightened during which phase of the trade. So prior to entry, during the trade, and after the trade, meaning, were you in fear before you took the trade? Were you fearful during the trade? Were you optimistic before? Like trying to ascertain like what you were going throughout the trade. And a lot of times you're going to find that actually your best trades are the ones you're most fearful of before entry. And a lot of times those are the ones that people won't take. And the ones that you're most optimistic about wind up being losers or scratch trades and things like that. So I do think it's important to kind of understand, they call it interoception, understanding how you feel, like having a good sense of where you're at prior to getting into a trade, and during, and even after that trade can kind of lead you to not fear that anxiety, not fear that fear, and realize that the your part of your psyche is trying to protect you in some way. But if you've done the work and have a strategy and things like that, you don't necessarily need protecting. You're not getting chased by a lion. You're just entering a trade at a clearly defined area where you can manage risk.
Absolutely. Yeah, your body doesn't talk to you in English. It talks to you through emotions. So before we go on to the next couple questions, for those of you who have joined us a bit later, welcome to the first webinar of 2024. Guest is Aaron Rentfrew from Mind Unbound. He's got quite a bit of experience, and my job here is to shed light on some of the insights he's got and developed over the years in the markets, and hopefully can translate into you guys using some tactical tools and bettering your trading strategies. But aside from that, what's your trading style?
So my primary trading style, I would say, is I focus primarily on balance and trend analysis. So I'm looking at where the previous balance was. Are we in balance currently? Are we trending in a certain direction? And I essentially use that to manage risk, come up with my targets and things like that. And for execution, I'm a little more focused on order flow reversals, and things like that at key areas where I know I can manage risk. So I would say that my trading style is really coming into each day really flat with the bias. Like I might have, if we're trending higher and we're one time framing higher on the 30-minute, the daily, the weekly, the monthly. I may have some type of long bias or want to be primarily looking for longs, but I need to know when I'm wrong. I need to know at what point does that flip? At what point do sellers maybe take control? And so my strategy is essentially writing detailed plans each day going into the day on where I want to manage risk from. At what area do I know that I'm wrong? And I generally want to trade as close as possible to that area so I can place my stop on the other side. And so coming into each day, it's slightly different. And then I'll look for when we get around an area of interest for me, order flow reversals or quick stop run reversals down at the lows or something like that, that will trigger some sort of an entry for me. So I use the footprint. I'm using volume profile TPOs, and then I draw out balance areas and extensions from those balances, which I'll go through in a little more detail in a little bit. But primarily, that's the main thing that I'm using to dictate which side of the trade that I want to be on.
Okay. Why do you believe your trading approach is better than just saying technical analysis?
Well, I think it can be somewhat subjective. So for one thing to be better than another, I would say that it's better for me, because I used quite a bit of technical analysis when I was trading stocks, and even options to a certain extent. And with stocks, I think the technical analysis can be a little more forgiving. And if you overshoot a trend line by a few points, no big deal. It comes back above, and you're still long the stock. You own a company.
Mhm.
It's quite a different thing, right? You may also have fundamental reasons to be in that stock. There's growth and quarterly earnings growth, quarter over quarter, and you're more on a fundamental basis and using technical analysis for entries, but you're
Mhm.
fairly you're confident that it will move higher in futures. I find that that approach didn't work for me. I tried that for quite some time, but if you want to be able to manage risk with a reasonable stop loss in the futures market, it can become quite challenging if you're using just trend lines and things like that, or RSI reversals, or just some of the traditional things. And it's not to say they don't work. I know people that use them successfully to
Mhm.
trade futures, but I feel that for each person, they need to find what works for them. And so what I do works better for me than technical analysis did for me when it comes to trading futures. I tend to I don't like to take drawdown in a trade. I'll take a little bit of drawdown, but I have a clearly defined stop. And so I want to get in as
Mhm.
close as possible to my pivot area, or where I'm looking to engage with the market. And it just lends itself better to the approach that I take now than it did for me with technical analysis.
Yeah, that's a very interesting answer. Yeah, from my perspective, I've come to the realization, especially in futures, that a lot of traders place a bit too much emphasis on patterns without really understanding what the futures market is. It's an auction place at the end of the day between buyers and sellers, right? And like any auction place, it's a culmination between people who are willing to bid up the market and people who are not really willing to execute at certain prices. So understanding the relationship between buyers and sellers from a numerical perspective could be very insightful from my perspective. But yeah, aside from that, let's finish off with one last question before we move over to the educational portion of today's webinar. From your experience, educating your own community, what are some commonalities among struggling traders?
I think that there are several, but I would say that the primary ones are going to be exiting trades too early, over trading, and
Mhm.
holding on to losers. So there are behavioral issues as well, where people tend to fight the market and revenge trade or get very angry and continue to trade. But I think that, those things manifest themselves oftentimes as over trading, or taking trades that are outside of your plan and outside of what it is that you wanted to do. And some of them, I believe, stem from issues around strategy. As I mentioned
Mhm.
before, that I do think that strategy can answer a lot of the behavioral issues and decision-making issues that people struggle with. And then there's some of them that I think stem back to who we are as people, which, cutting winners too soon, it could be because you don't have a good exit strategy. It could also be because you grew up poor. And, I didn't grow up with much money at all. And, I was taught to hold on tightly to everything that I have. And so when you're trading and trading futures and things like that, behaviors like that and an upbringing like that will have you wanting to close out winners very quickly and hold on to losers in the hope that it's going to come back to break even or that you'll be able to get out of that trade. And so some of these things are behavioral, some of them are strategy. And I think in working with people, primarily that's the thing that I'm trying to work on is figure out where that issue is stemming from and how can we address that issue for the individual themselves, because I do think it's quite different for everyone, but a lot of them are going to stem from that place.
That's a great answer. Thank you. Let's get started with the educational portion. I see a couple of people asking, how do you set balance areas? So, anonymous attendee, we're gonna get started on that right now.
All right. Should I go ahead and share my screen?
Yeah, go ahead.
All right. Give me one moment. All right. Can you see my screen?
No, I still see my PowerPoint. I think I'm gonna stop
You're going to have
first.
to stop sharing first.
All right.
All right. Good to go.
Good to go.
All right. So what I mentioned before is that I focus quite a lot on areas of balance, extensions from that balance, and trying to figure out when we are breaking from balance and where I want to engage with the market. What we're looking at here is the NASDAQ. There's a volume profile placed here. So basically how you would do that is simply just drag the volume profile onto your chart, and then you can put the little green dots. I put it all the way to today, and then I put it to the start of this balance area. And you can see here, there's a couple different ways you could figure out where maybe a balance area might land or where you might want to look for balance areas, right? So we can use the volume profile for that. And you can see here a very clear balance, right? So a couple of touches of the low, multiple touches of the high. To me, that's a very clean balance, okay? Now within that balance, we have other small balances that we can use as well. And this can get a little bit like the matrix here when you start looking at areas of balance, but this is how I personally manage risk and how I view the market. And, to something that Omar said before, this is an auction. And, I had someone tell me a long time ago, who's a very successful futures trader, that I was more biased in the market and I was always like wanting to be bullish or bearish and coming into the day very biased. And his superpower and his opinion was that he had zero bias at all. And he explained to me that the market is just seeking a fair price to do business. And you don't know what that price is, but you can tell by using the volume profile. So just follow the fairest price and determine when that becomes unfair. The way that I do that is using balance areas. And you can see here, these high volume nodes or high volume areas are the fairest price. And you can see here that this was the fairest price. And we created a really nice balance in that area. Same thing here. We created a balance within this area. You can see a clearly defined balance and fair price in this area. And as those prices become unfair, we break into new areas and we create new balances or new distributions, as you would call it. So these are just clean distributions in an uptrend, finding the next fair price to do business on the way up. Now, as these define areas, right? So these define, clear levels that you could use. Within that, they're also going to show you other things. So if we just trace that balance area over a little bit, right? And so if you have MotiveWave, you can just right click on your chart, go to tools, go down to commentary and open up a box, and it will give you a box like this. Then you can add the color in there. Pretty simple to do. But when we look at this, we can see at what point do we break from balance. It's a look below and fail in this case. The target on a look below and fail of balance would be the other side of balance, right? So that's a very large trade for NQ. Looks like about 1,000 points to the top of this balance. But also we have this balance here that we broke from and then found resistance and dropped all the way back to the low. Now, the interesting thing about balance areas is that it's not just that balance, and oftentimes the retests of those balances that are important. For me, especially when you're at all-time highs. So this is something that I get asked all the time on Twitter is, how are you picking out levels at all-time highs? Because a lot of times I'll tweet out like I would be cautious at a certain area, and then we see resistance in that area at a price that's never traded before. And so within a balance, you also have extensions from that balance, right? So we just created a pretty nice one in here as well recently. We broke above, we retested, and then we broke out. Now, when we broke out, where did we go to? We went to essentially the extension from that balance. Okay, so pretty much a perfect 100% extension from that prior balance. We did a look below and fail, retest, target the other side, a breakout, essentially went to the top of that balance. Now, if I take this balance right here, very simple, I'm just drawing out basic lines here, and I just copy that. Where would the extension from that one be? Kind of in a similar area. And from this one, if I put a couple of extensions, it brings us right up into a similar area. And when we kind of looked up there, now I know this looks a little complex, but this is how I look at things and how I create levels and areas of interest for me. So I want to be cautious in this area. When we look up above and then fall back below, those are areas where I'll look for levels or confluence within multiple balance area extensions to come up with the zones of interest for me, which is how I manage risk. In another market, so this is just a quick NQ and where I might create levels from. So you could take a balance area like this and also chop it into quarters and come up with levels at the quarters of this, or the eighth, or even on a 1,000-point balance area, maybe 16ths. But in ZN, we recently had a really nice balance. And this actually has one of my indicators on it. But a lot of times, one of the best areas to look for balance is when we've been selling off, and then we start to put in a really nice balance. So in this case, you put in a low, we get an order flow reversal, trade to the top, and then we bounce back and forth almost in a perfect balance. When we break from that, they do a little look above and fail. It's not always easy to trade a break from balance. They don't make it easy. But when it breaks out, it eventually goes to the half back, all the way to the extension, goes to the second extension. You get a nice order flow reversal there. Trades all the way back, down, breaks back into the original balance, target the low, tries to bounce, and then we get this move on CPI on Tuesday. They break up to the half back of that original balance that started and liquidate down. And if you put extensions down there, you would have levels to the downside as well. And so going into each day, right, I have balance area levels that I'm looking at. And so, for example, in NQ, I then will go in and write my plan. So where are my levels and zones? There would be too many of them to get into here, but this is where my daily plan comes in. Now I'm looking at the structure of the current day, the gap that we had, maybe this low volume area in here. Yesterday on Twitter, I shared an area for a bounce that was in here around 590. And it was just simply based on buyers holding this prior value to defend these prior swing lows, and that buyers should defend in this area, which they did. It later got taken out, but once back above, we started to squeeze. Kind of a similar story today. We start one time framing higher, we look into the gap, can't fill the gap, find some resistance. We trade down into this low volume area from the prior day and bounce back out. So each day, just going in, knowing where I want to manage risk from, is a huge leg up, and simply using the volume profile, at least for me. I'm primarily focused on low volume nodes as opposed to high volume areas. High volume areas more so for targets for me. Low volume areas is where I want to engage with the market, because as I said before, if the market is seeking a fair price to do business and the high volume area is the fairest price, then that would make low volume areas more or less an unfair price. As price moves from fair to unfair, it creates low volume areas. when we fall back into low volume areas, like for example, what happened here, that's where opportunity lies. That's an advantageous price, right? So unless they break back into this fair price, I'm looking to engage in the low volume areas for those look belows and fails and things like that, trading it back into the high volume area. So that's basically, like in a nutshell, how I manage risk on a larger time frame, and then attribute it in the same way to a smaller time frame where I can kind of narrow it down to maybe a 8 to 10 point range, 15-point range sometimes, uh, where I can take a trade, knowing that I can put my stop 10, 15, 20 points below. And if I'm wrong, then chances are I could play it the other way and short it lower.
Got you. Is it possible for you to go back to the ZN 30-minute time frame?
So which one?
Yeah, that one over there.
ZN? Yeah.
No, let's go back to the one that you were on already.
NQ.
Let's go to the right. Yeah. So can you point towards the volume profile that's second to the right? The second last one. Yeah.
You hear? Yeah.
Yeah. Can you go all the way to the bottom where there's the high volume area?
Yep.
So pretty much for the traders that are taking a look at this chart, right? Someone that doesn't have access to the volume or a base understanding of volume profile wouldn't have seen the fact that there was an increase in volume right at the breakout, where there was a significant amount of effort being put towards either the buy or sell side. Shortly after, you'll see, after the high volume, you'll see a low volume area where price refused to facilitate lower. And right after the effort wasn't rewarded, you'd see that the price reversed very sharply, right? So that's something that is very insightful when you're incorporating volume in your trading, because as a regular retail trader, you might have just seen a breakout or maybe a large hammer candle. But without the volume and seeing the effort not being rewarded, you're not really able to confirm that there are trap traders.
Yeah, I would agree with that. And also, so in combination with this, so I can't share my whole screen because it's a 49-inch monitor and it would be very difficult to see. But in combination with what you see here, I also am watching the footprint, which more or less is giving you very similar information, but on a very small time frame. And I can also see the delta. So I can look and see trap traders. I can look and see trapped longs and shorts getting absorbed in certain areas, or these nice tapers that you see at the lows on a 30-minute footprint are very clear. You can just see volume dropping as we move into an area of importance. And if volume is dropping as we move into an area of importance, then generally if less people are engaging down there, we're going to bounce away from that area and find more liquidity. We're going to find an area where more people want to do business. So I look for very similar things, but also on smaller time frames, like a 30-minute footprint.
Sounds good.
And I do see some questions coming in, which I will get to in just a bit. So some people were mentioning, and I was going to get into, like, do you trade the edges of balance? Do you look for the breaks from balance? I think that, so if I'm looking at this, right, this large balance here, I want to be, as we're trading in here, I'm starting to identify, okay, we have a range, okay, especially after this second touchdown here. We're in a range, and if we start bouncing into here, I'm not going to be super bullish, right? We're in a balance. You can kind of trade this both ways. In something like this, I'm looking for two-way action until we actually start to break away from this area in one direction or another. So in this case, as we start to break down, potentially I might have a more bearish stance going into that day until they retake the bottom of that balance, at which point I would flip my bias very quickly and then start managing risk to the long side, thinking of it more as a look below and fail. in which case I'd want to be playing it long for the next few days, looking for a reversion trade all the way back to the upside. The halfback to me is, or the midpoint, however you'd like to refer to it, or the 50% retracement here, is somewhat important. It's really telling you which side of the balance that we're on. If we're, obviously it's a little more constructive for the bull side. If we're on the upside of that, down here, you have a higher probability you're going to come down towards the bottom of balance. And then you would look for essentially reversion trades. And as we're trading towards the middle, you got to be real careful and look to trade it both ways. And I would be more of a scalper in this area until we break away from it, where you would look for more of a trend in one direction or another. Now, when we break from balance, it's a different story, right? So I think that breaks from balance are rather challenging to trade. Now, sometimes we're just going to break out and go. Sometimes we're going to look above and fail. Sometimes we are going to look below and fail. And sometimes you just have to get in and hold on tight because we will start to take off. And, you know, it's very difficult to know which one it's going to be. But usually that first break above a balance, you're going to get a little bit of a squeeze. And this is why we manage risk, right? You take some profits along the way. You're not looking for a break from balance, then just run 1,000 points. You would take some profits along the way, but you have an area now, a defined area where you can manage risk, right? Towards the top of this balance. You know, it held multiple retests. Once we dropped below, we came all the way back up to it, tested that area again, and dropped 250 points, right? So this is just an area where I want to manage risk from. It's nothing more, nothing less. It's simply for me an area where I want to engage with the market. Now, then sometimes you're going to get a day like today where they chop this area. Now, everyone's been buying or selling this level for the better part of a week and a half. And now we do something like this where they just chop it to death. And you have to identify that kind of early. And you kind of could see it in the overnight session that this area was just getting chopped up. And they've continued to do so during the RTH session, the regular trading hours. But you can see that that's happening. And then it becomes important to, okay, I'm going to either trade this as a balance day or until we break away from this area again. And then I would look for a trend either down towards the bottom of balance or breaking up to one of the extensions above. So balances can be tough to trade, but if you are proficient with the DOM and watching order flow in some way and focusing on the volume profile, you can get a better idea of where it is that you want to be engaging with the market and where you want to kind of hold off, especially on an intraday time frame. So that level there is right around, let's just call it 17,800. So if we go to today, that area is up towards the developing value area high. So now, even though we've violated it a couple times, that's been a decent area to sell aside from one time. So any look above that has been a fairly decent area to sell. And now we've created a bit of a low volume area up here. The one look above got rejected, and now they continue to reject that area, but they keep knocking on the door. So to me, it's not an easy short, but you don't want to be taking longs up into here. And that's a lot of times what you're trying to, I think, ascertain with understanding balance and understanding value is that I know that this area is probably not where I want to get long until we break away from it and then survive a retest of this area from the top, at which point then maybe I would engage with the market again. And this would be a good area to engage again. So I would probably look more towards the short side in an area like this than I would to the long side, just given the price action that we're seeing today and the developing value that we're seeing. So value area highs up here, right kind of at the top of that balance.
As a regular trader, you would see a engulfing candle and a breakout, which may actually, if you're relatively new, make you enticed into a long trade, right? But when you take a look at the volume profile as a confirmation, you'll see that it was a weak breakout, right? You'll see the volume tapering off at the top. And then subsequently, you'll see increase in volume and then a move towards the downside.
Yeah, I mean, a day like this, so A big part of intraday time frame trading. So most of my trading is done in the first 2 hours of the day. I rarely take trades past D, E, F period. I might be on voice chat with a group or something like that, but I'm not generally trading past that. Most of the activity is going to happen in A, B, C, D period. So that's where I generally want to engage. But when you look at this, so we started one time framing higher on a 30-minute, meaning we were just in a slight trend up. We rejected that. Then we rejected the move lower. And now we're just kind of chopping around back and forth. This is just a very traditional balance day for right now. And it will continue to be a balance day until we break away from this area. And if and when we break to the upside, it has meaning to me, right? So it has meaning to me because it could confirm another break from this balance and that we may run. And if it breaks to the downside, meaning it starts to trade below value and we start to see initiative selling below value, we'll probably come back down towards the value area low from yesterday. And potentially we could trade all the way back down towards the middle of this balance or back down towards the low of this balance. So that's really how I would use balance in my intraday timeframe trading. Is really not always am I going to trade it from the top of balance to the bottom of balance, but I'm just going to use those areas to manage risk and manage more or less my bias for what direction I think we should go from here, and also confirmation of when I think we're going to be breaking out versus when we're maybe just chopping around and trying to find acceptance in an area that may be running into some selling.
Got you, got you. Very interesting. So I got a question from Christian. He's asking how you'd make sense of it on a scalping strategy.
So what's true in larger time frames is often also true in smaller time frames. So you can apply areas of balance to really any time frame, and whatever strategy that you're using. Let's just pull up a 5-minute chart of the same. Now today it might be a little messy, but even if I was to, let's say, I like a little bit more time, let's try and find a cleaner area. Okay, so someone did also ask how I draw the balance zone. So you go to tools. If you right click on your chart, go to tools, go to commentary, go to box, and then just click on your chart. You can just put a little box there. So at the highs recently, we had a nice little kind of balance here where we were chopping around, trying to find acceptance. I usually like 2 touches of a balance. It really depends. Another thing that's important, you need to test all these things. So oftentimes when I draw a balance area, for example, like one of these balances, I'm going to draw it and then I'm going to test it for a while. And the reason is because I want to measure where do these levels work well? Do the extensions work well? Are the levels being active? Are the levels showing resistance and support when they're hit? And if they're not, I may redraw the balance area and change the levels slightly. So in an area like this on a smaller time frame chart, if you start to see a balance develop where we're kind of chopping, we're ending one time framing, we're taking it the other way, we're looking the other way, you can draw balance areas on smaller time frames and look for the break from that area. Now, the smaller the time frame, the kind of easier it is for them to trap. So a lot of times they will balance for a little while, and then you'll get one last look above that area or look below that area. But then when it falls back into that little balance, it's almost always going to trade to the other side, and it may break even down from that area. So you have to be, I think, a little more cautious on the smaller time frames, but the same rules more or less apply on every time frame, because even on the small time frames, you're going to have algos and other things that are trading these small balances, and they generally operate based on extensions. So they're going to be buying or selling based on extensions from 100% or 50% extension from a certain area of balance, and that's why these balance areas work so well. and a lot of institutional traders and floor traders use those things as well, is they find a balance. If we break from that balance, they're going to look for the 100% extension from that balance. Now, today is not a perfect, even though it is a balance day, it doesn't have a kind of multiple touches of the high and low or anything like that. But, you know, if we just simply add a half back in there, and then look, where would we extend to should this break, or at a minimum, the, you know, the 50% extension, you know, perhaps you run up and test some of these other areas to the upside. And the same thing to the downside if it was to break there. But I think you can use it on any time frame, because really you're just looking at right now, this is the fairest price. And if we were to break from this balance, this price is now being deemed unfair. And we don't know where that's going to stop, but we might have some clues as to where it might go and find its first and second resistance from that area. So I think any time frame can work.
Gotcha. Gotcha. Let's take a look at some more questions over here. Does anybody else have any other questions?
So someone did ask, how do I create the balances? Are those based on market profile or volume profile, value areas? And does it include the value, or do you like to include the higher swing low? So kind of a perfect balance to me is what we saw in ZN recently. So this is January 18th through essentially January 29th. So 10 days we were in this balance. Now we have multiple really nice touches of the low, multiple really nice touches of the high, and it creates a very natural balance zone. And my favorite balance zones are after a pullback. And then we balance in an area, creating a very fair price and a very fair price range. Okay. And then when those break, the extensions work very well from those areas. And again, as I said, you can add more levels than just the halfback. And the easiest way to do that is in the cloud level study. If you have the cloud level study, so just as an example, you know, I have multiple cloud level studies. So if I want to add, give me 1 second, I'll add some NQ levels to this chart, and you can kind of see. I don't know if you guys are able to see boxes I'm looking at, but so you can essentially build cloud levels based off of balance zones and then add them to any chart. And they're easy to build in Excel, and then create a CSV file with them and simply log them out there. So I do recommend taking a look at the cloud level study. And then when you have a balance zone, taking the high, taking the low, subtracting the two. Okay, let's say this is a 500-point balance zone, then breaking that into equal parts divided by 8 or something like that. For, as I said, for a large balance zone, maybe 16. And then you can turn this into levels in this area and then extend it as far as you want. You can extend those balance area levels as far as you'd like. And they tend to work quite well for quite some time, especially on a very clean balance, something like this. When you get a really nice, perfect balance, those levels work very well. And that's also how you can create price targets that are well away from the current price or above all-time highs, especially if you have multiple balance zones to work with and multiple extensions. You can then look for confluence within those levels. So if you have like 3 levels at the exact same spot, there's chances are that there's going to be some activity in that area. Someone asked if I only trade the edges of balance. No, because I trade all day, but I do use the edges of balance to dictate parts of my trading plans. So if for example, let's say, for example, I wanted to be long today. If I wanted to be long today, I want to be taking profits in this area. So if I wanted to buy this dip as part of my plan, then I want to be taking profits up into here until we break above, find acceptance and survive a retest, at which point I might consider longs again. So I do use the balances to dictate the targets and more or less bias and which areas or levels are going to matter more for me on a given day. So it incorporates itself into my plan and things like that. So my intraday plan. And likewise, if I was looking for a short in this area, like in today's plan was to not really short above 802, right? So I didn't really want to be shorting above 802 because technically that could break us away from this area. They tried it, it failed, but you're seeing buyers continue to step in here. And our long zone this morning was, I forget, but our long zone this morning was here. 680 to 697 in our plan. Yesterday's plan was here. So I think for me, I do use those areas to manage risk, a lot of times to take profits into those areas, but more so for extensions and for levels and things like that. So when we pull back into levels of importance, as long as it aligns with the context of the market profile and volume profile, then I'll use those levels to take entries, exits, even if we're towards the top of balance, anticipating that we might break from balance. And in this case, after that move we saw at the lows yesterday, I wouldn't say I was bullish, but I wasn't exactly bearish if we couldn't get back below the point of control and trap some of these late longs that were in there. I wanted to kind of join the party, maybe looking for a break back above. One thing about yesterday's action, liquidations can strengthen the market. So we have to keep that in mind and not allow like really strong selling to get us super bearish. The market rarely moves from trend to trend. So we rarely go from trending to trending lower. You will see that we've been trending higher, and then you're going to get sharp liquidations in there. Liquidations have the effect of shaking out weak-handed longs, giving patient longs an opportunity to get in and trapping more sellers because it looks really bearish. A lot of people will come piling in. And then when we bounce, it can be a violent bounce back to the upside. So the worst type of selling is a slow grind where we slowly start grinding lower and we're grinding through a bunch of buying. That is a little bit more bearish to me. Or if we balanced up here for multiple days and then broke from balance, kind of similar to what we saw. If I zoom out here. Something like this, where we balance for multiple days and then break and can't retake, then I look for shorts. But rarely do we get these sharp sell-offs, but they get bid right back up. The sharper the sell-off, the more weak-ended longs it shakes out, and then we can often bid right back through that. This type of action is a little more dangerous, and then you see a little look above that fails. And if they get below it, that's where I would say, okay, that looks a little toppy to me.
All right, so we got some questions from Marcus and Tyler. Before we answer these last two questions, we're going to pop up a poll and survey where everybody can decide what type of webinar you guys want next, whether or not you guys found this one valuable. If you guys have any specific questions that maybe haven't been answered already, you guys can drop that in as well. So, Aaron, did you want to just drop in that poll?
What's that?
So there should be a poll option right underneath. If not, you can make me the host again and I could probably drop that in.
Just a minute. Okay. Yeah, if you want to go ahead and throw that poll in there. I did see a couple of who was the last two questions? Which one do you
So it's going to be from Marcus and Tyler. So Marcus asked, can you show us how to use this in conjunction with order flow, footprint, and delta? So I have a screen recording that I'm going to show Marcus. And for Tyler, it's going to be how would you work that into plain support and resistance? So again, I'm going to show that to you guys as well.
You want me to share my footprint? I could do that.
No, I got a recording.
Okay.
Yeah. So we're just gonna give it a couple minutes.
What is my profit taking strategy? Is that the one you mentioned? Sorry, I'm
No, I didn't mention that.
there's so many there's a lot of questions in here.
Yeah.
Um, if you want, I can fire through a few of these.
Yeah, absolutely.
So what time frame do I trade is an important one. I am much more of a scalper. So in NQ, I'm looking for, so I generally run with a 10 to 15 point stop. And my first take profit is either 10 or 15 points. And then from there, I'll leave runners on. Usually looking for 25 to 30 points with my second take profit. And then with the last one, sometimes between 40, 50. If the market's really running, I'll just leave it on and let it go. It depends on the type of day it is, but I'm a much more of a shorter time frame trader, I would say. I'm going to trade anywhere from 3 minutes to an hour, depending on what's going on in that type of day. Since volume is constantly changing as the chart is being built, how do you readjust your window and how often do you do it? I don't need to readjust the window. Like for example, if you use this volume profile feature here and you drag it all the way to the right, it will continue to stay with the most recent bar. So that's a composite profile. And on the intraday time frame, these adjust with price, so you don't need to readjust them. They'll continue to build throughout the day. This is the TPO study, not the volume profile study. This is the one that I like to use because I can also see the single prints and things like that, like single prints like in here that we created on, was that Friday, that we retested and where we failed from. So I always want to know where the single prints are. You can also see those a lot of times they'll look like LVNs, low volume nodes on the volume profile. But time and volume are really, so when you hear me talk about acceptance, time and volume are kind of the key components of acceptance. The more time and volume we're putting above a level is a sign of acceptance. I'm just firing through a few of these. What is my profit taking strategy? Profit taking strategy is generally based around my levels of extension and things like that. So when I take an entry, so first thing I need to, so when I write a trading plan, what type of trade am I taking? Okay, so the plan for the long here, the first area I'm looking for is going to be, really what I would call my risk reduction exit. So if I have a 15-point stop or a 10-point stop, I'm going to start taking some off at my first level or area of importance that's around 15 to 10 points above where we're at, because I know there's going to be activity at my level. I want to look and at least get off a portion of my entry there to reduce risk. For me personally, it helps me from wanting to move my stop or adjusting things like that. From there, I'll adjust my next take profit to the next area of importance, but it really depends on the developing profile and what's going on also in the delta and footprint and things like that. For example, if we're moving up into a zone of importance for me, and there's a lot of trapped longs above, right? And I'm long, and they're moving into a potential area where there's a bunch of trapped longs. I may put a take profit just below them in case that area of trapped inventory becomes resistance. And then I'll hang on to a runner to see if we can grind through them and then look for the next area of importance for me. So like, for example, if I was long from down here, I may take some off as we move into this next low volume area from the prior day, perhaps at the halfback here, because oftentimes the halfback will bounce into that and find resistance. It's also at the prior day's value area high. And then maybe you're looking for a reversion back towards value area high. In this case, that 802 area was important to me. So I'd probably want to be flat around that area. So for each trade is slightly different. But again, I probably wouldn't still be in a long from down here because it's been multiple hours. We've already come up and tested that area. The only time I'm going to exit a trade early is if I see a reverse engineering of my entry. And this kind of comes back to what I was talking about before with kind of having an exit strategy. I'm going to stick with my exit strategy and take profits where it makes sense to take profits unless I see something happening when I'm in a trade. If I start to see order flow reversals, if I start to see buyers getting trapped, and I start to see what looks like a good short setup and I'm long, then I'll flatten the trade before it gets to any upper targets or anything like that. I'll just get out because I can always buy it back. But for me, I look for those types of things that are almost a reverse engineering of my entrance strategy if I'm going to take early profit.
Okay, awesome.
Sorry, try to fire through a few of those. I know we're over time.
Right. There's a lot of questions. So, and poll results, pretty well. It went pretty well. 94% of people liked it. Trading strategies won out in terms of what people want to get covered for the next couple webinars. So basically, before we finish off, I just wanted to let everybody know that we do have updates and support, a sale coming up. It only happens once a year, 25% off. If you guys were waiting, I'm sure as a lot of you guys have been waiting for almost most of the year. Make sure you guys take advantage of that. And those of you guys that are on the fences, we send out, what is it? In 2023, we had about 23 updates just within 2023. So we do take a lot of product feedback and we do improve our product quite a bit. If you guys do have any advice or suggestions for feature enhancements, if you guys like something another trading company does, be sure to send over that feedback to support@motivewave.com. So once again, that's support@motivewave.com. We'd love to hear your suggestions and maybe incorporate it into MotiveWave. But with that said, I'm going to answer about 2 more questions. Aaron, did you want to add anything else before I wrapped it up?
No, not really. I mean, if you guys, if you don't already follow me on Twitter, I'm sure probably quite a few of you do. You can check me out there. I do have also order flow reversal signals that I built just for MotiveWave that are proprietary to MotiveWave that work quite well. So you guys were asking about order flow reversals. If I toss on, for example, what we look at for the NASDAQ, I'll just share a quick little bit with you. If I toss on some areas where we may have seen order flow reversals before, just give this a moment to load. Essentially what I'm looking for at these areas of interest in these order flow reversals, Connie, we'll get back to your question maybe on another one that we don't have time today, is I'm looking for strong buyers to get reversed by stronger sellers, or strong sellers getting reversed by even stronger buyers. And we can automate this process a little bit and identifying those areas. And it popped up for a second and then disappeared. There we go. So essentially what this indicator does, I give this to all my members, but it identifies those areas where order flow reversals take place in the volume. So it's looking at the bid volume, the ask volume, the speed of the tape, all different types of parameters to fire in certain sequences to identify where order flow reversals are happening. If you have any interest in that kind of stuff, you can check out mindunboundtrading.com and or shoot me a message on Twitter. I'm happy to share more information with you. But outside of that, I look forward to doing it again. I mean, I can go through and do a footprint one. I can do execution. I think most people are very interested in execution. So that sounds great.
Mm-hmm. Yeah, for those of you that want more information, you guys can always visit MotiveWave. It's going to be under what's it called, pricing marketplace, and then you'll see Mind Unbound posted on our website as well. But with that said, let's wrap it up with answering the final 2 questions and replay recording. All right, so firing up MotiveWave. First chart is the 1-minute chart. Right underneath is the delta volume bars indicator. Right underneath is the 5-minute time frame. On the right-hand side is the 15-minute chart. On the top right, it's going to be the footprint chart with a delta configuration. So it basically, each level only shows you the difference between buyers and sellers. So for example, this would be 526 more buyers than sellers. On this row, it'll be 179 more sellers. So Aaron, did you want me to get started with the replay and maybe kind of outline the relationship between buyers and sellers and when and how to spot when it shifts?
Sure, go for it. It's a different configuration than mine, but I can probably tell.
Yeah, it's I got a little bit of volume profile. It's a little bit like yours. Okay, so if you guys can take a look, live markets, market just opened about 9:33, 9:34. You'll see the candlesticks over here. You'll see the delta volume, which basically represents the difference between buyers and sellers, just like the footprint chart, but it's going to be vertically placed. You'll also see the delta over here. So there's 300, 314 more buyers than sellers at this given point in time. Right underneath, you'll see the volume, right? You'll also see the volume in the last couple candles as well. You can determine your look back period to whichever period you would like. Right underneath, you'll see the delta. Right underneath, you'll see the delta percentage, right? So basically, as a trader, your responsibility is to determine whether or not buyers and sellers are stronger at a certain level, right? At key levels of support and resistance, a lot of people might just look at historical price patterns and they might have back tested it a couple thousand times if you're dedicated. But it doesn't, the double bottom that you've seen yesterday and the day before and the day before, it doesn't necessarily represent the real relationship between buyers and sellers. Who's stronger, who's weaker, it doesn't really represent it correctly. You need to actually understand the composition of the buyers and the sellers, right? So in this case, you'll see as price went up, volume went up. You'll also see that delta went up, which basically represents more participants entering the market and more participants agreeing in price going towards the upside. I know a lot of people probably take a look at hammer candles and view it as a bullish sign. In this case, it was representative of a bullish sign. But a lot of the times, if volume maybe peaked at the top and then flushed and then closed at the top again, this might actually be negative, which might give you an early indicator of bearish pressure, which you might not otherwise see on an actual candlestick chart. Over here is another way. I know this is quite a bit for new traders or traders who haven't really been well versed in order flow, but I can probably fast forward this a little bit more and give you guys an example. Okay. Right over here. So at this given point in time, you'll see volume was elevated, but it's decreasing, meaning market participants are less interested at these levels. You'll also see the selling pressure has decreased. What happened right after? There's still a little bit more selling. You'll see a little bit more effort. On the delta footprint charts, you'll see pretty much this, but in a different way. It's a different form of interpreting the markets. You'll see 74 for sellers. You'll see 181. 181 people wanted the market to go down. They might have hit the bid. Immediately after, there was less people, coinciding with the volume and the less delta, which gave you an early indicator of sellers slowing down, decreasing in strength. Subsequently, you'll see the markets start to go up, which is represented in the shift of volume and delta. Volume and delta, right? So I'd encourage everybody that's in this webinar to this point to really take a look at order flow. Google it, YouTube it, add it as an added layer of confirmation. Because Order flow coupled with discipline and a positive risk to reward ratio, preferably 1-3, 1-2. That's all you really need to be successful in this game. Execute flawlessly, understand that the market is an auction place, and be disciplined. You're not going to make it if you're not disciplined. With that said, maybe this could be a topic for another time. Who knows? But I guess this marks the end of our webinar, Aaron.
All right, man. I appreciate you having me. Thank you guys for joining.
No worries at all. Just give me 1 sec. I got a little bit of a write-up. So thanks everyone for joining the webinar today. Again, I appreciate you guys all for sticking to the end. I look forward to hearing you guys in the inbox for the updates and support sale. I'm sure Aaron is looking forward to maybe educating some of you guys in the future as well, if you guys would like some more information about volume. And yeah, once again, thank you, Aaron, for hopping on this long Zoom call. And see you guys in the next webinar.
My pleasure, man. Take care.
Take it easy.